tips real yield. So that's about 2.5. And if you look at what the Fed's done on the rate futures, they've driven the 10-year tips yield up to about 2.5. So 2.5 plus 2.5 is why we have a 5% handle or close to it on the 10-year yield.
Basically, one of the questions is everything pretty much priced into stocks? Right. I mean, if we sort of are volatile within a band that goes from 5% to 4.85%, and this sounds super technical, but basically we don't break too far out of that 5% level on a 10-year yield. Can you get enthusiastic about buying stocks, particularly those that have been most beaten up, like small caps?
Small caps, international, and value relative to growth are all what we call one big trade. They tend to do well in a more reflationary and stronger economic growth environment. What we have been emphasizing is what's called cyclical value. These are things like capital goods, financials, transportation, basic materials, energy. And on the short side or the opposite side, your media, your entertainment, your internet, semiconductors, your tech hardware like Apple, autos, Tesla, 85% of autos is Tesla. These would be the shorts. Yeah, I agree with your earlier when you were talking about the seasonality. November 1st to April 30th, the cyclical value tends to beat the cyclical growth, and we're on that trade. But for the overall index level, no, not much more than 4,400.
When you talk about that trade cyclical value, Barry, what do you think is the catalyst to get that moving? Beyond seasonality, what are you looking for? Is it an earnings catalyst, a yields catalyst? What is going to drive capital into those riskier trades?
When you look at all the economic data that's available to us, and then you settle on the ones that statistically are the most useful, that we find the ISM PMI manufacturing index is just incredibly useful. Our target there by April of 2024 is 53. Over 50 is growing, and it's bottomed at recently at 46, and it's headed towards 50. If that happens, then that's associated a 53 ISM PMI manufacturing with stabilizing wages. The Atlanta Fed wage tracker, the ECI wages and salaries, that'll stabilize. We'll need productivity to avoid a high core inflation rate if that occurs. Also higher commodities. They swing from being down 25% on the Bloomberg Commodity Index this year to being up 10 next year. So that's all positive, and that's what drives the cyclical value trade relative to the classic cyclical growth trade, which is big tech.
Barry, dollar strength has been a feature of the 3-month, or call it 3.5-month sell-off in risky assets. And I'm curious, what is the impact of a stronger dollar on U.S. equity earnings, and what are your thoughts on the dollar going forward?
The dollar is one factor in earnings. The other is, what happens, as Gina's often talked about, what happens to margins. Margins were prolonged, I think, by some of the cost cutting in tech. They had 12 years to build up a layer of fat, and all they did was lose that. And so they were able to preserve their margins. The dollar is stronger, has been stronger because of the rate differential. Real and nominal rates in the U.S., the Fed is just well ahead of other central banks. Now that the Fed is probably closer to having finished the rate cycle, we can focus on global economic growth. And the global LEI year-to-year change has begun to pick up. That's, again, why we prefer the cyclical value over the cyclical growth trade for 6 months.
Barry Bannister of Stifel, thank you so much for being with us on a day ahead of a really important week. And Gina, that to me is sort of the conundrum, and it's sort of a theme this morning, which is you can get right the concept, but convincing other people to come along with you is a totally different story. Basically, I feel like the template for this morning is me saying, is this normal? And you saying, yes, this happens every year. Is this normal, though?
Well, look, I think that the other thing to consider is every year is different. I do think that it's been an abnormal experience over this cycle because of the inflation dynamic. And we've talked about this a little bit. And Barry mentioned that I talk about margins all the time. I'm becoming known as the margin person because inflation has been so consequential to driving overall trends in equities. And it still is very consequential. And this is a big adjustment process for us because we didn't have to contend with a consequential inflation for most of our career. So I do think that it is different. It is certainly this environment of wars breaking out all over the world is also very different this year relative to past years. So there are certain differences, and the movement in yields has been so painful.
Well, Gina, let me
over the
build
course
on
of the
that.
last 2 years.
Let me build on your comment about margins and take that to the financial sector and talk about net interest margins, right?
Yeah.
Now we've got a steeper curve, right?
Yeah.
I mean, banks can maybe begin to think about making money again in this environment. I mean, go figure,
Yeah.
right? So I wonder how that changes sort of the dynamic and how people are going to look at financials and the big banks in lieu of what we're seeing. I mean, I don't think earnings are going to be so great, but I'm curious to see how they kind of wind up here.
This is going to be one of the questions, especially as we've seen regional banks really struggle. When people talk about some of the potential pain points, you can see that. And when you talk about the yield space, just let's take a look at what we have seen in yields. They are climbing a little bit today, but honestly, I really can't stress enough. Anything can happen as the day goes on because the volatility has been tremendous. Right now, we're looking at yields that something are 4.86%, around that, 4.89% climbing as we speak. Really, again, the volatility here has been tremendous. S&P futures 4,163, up 0.6%. Right now, I do want to go to that question, though, Gina. I mean, from the respect of banks, when do they catch a bid? When have they fallen enough?
Probably when we start to see loan growth accelerate. So you talk about NIM, right? You talk about net interest margin. The potential is there, but the problem is nobody wants loans. Right. So the financials can't make money if they don't have any top line growth, even if NIM is widening. And with the whole curve much higher, the entire yield curve is much, much higher than it was 1-2 years ago. There's just not a lot of demand for loans, and that is keeping the financial sector constrained in an environment where they're also somewhat risk intolerant, and the non-financial, non-public financial companies can be a little bit more risk tolerant. So that creates a lot of competitive dynamics that I think are going to keep the financial sector, unfortunately, somewhat suppressed in the near term.
Honestly, I keep thinking about what this means for liquidity. I mean, Damien, every time we talk about strange moves.
Well, you know, you mentioned the real yield, the 10-year real yield at 2.42%, right? I mean, think about what we've just witnessed over the last few weeks. This was not a move that was driven by real yields expanding like we've seen in the last few months. This was about break-evens. This is about the market coming to terms with the fact that the Fed is going to pause on Wednesday, right? And so I believe, you know, this is an interesting dynamic as we move from this whole real yield expansion, which is awful for risk assets, into inflation break-evens and inflation expectations. That's kind of a dynamic.
And the University of Michigan sentiment survey that came out on Friday, no one seemed to care about it that much, which was sort of surprising to me because it highlighted how much inflation expectations, at least in the near term, are spiking.
Yeah.
It kind of goes to this question. If we start to see a real acceleration, what that does. We're going to talk about that with Barbara Reinhardt of Voya Investment Management. She's coming up at 8 a.m. She has been correct on stocks and bullish. Let's see if she's changed her mood at this time.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
season is here.
Tons going on, lots of earnings.
Beat wherever you look.
Bloomberg breaks the numbers first.
It's a tale of two earnings. Results from Goldman Sachs, Bank of America, and Morgan Stanley.
Netflix is out, guys.
With exclusive expert analysis.
Recovery is underway.
They crushed it. It was one of their best quarters ever.
This is a story all about pricing power.
We're going to make more money. We're going to make more money. And we're going to make more money.
They're making bank. And I think that is what we could take away.
Bloomberg Television and Radio. Context changes everything.
We're going to move a standalone Israel funding bill this week in the House. I know our colleagues, our Republican colleagues in the Senate, have a similar measure. We believe that that is a pressing and urgent need. There are lots of things going on around the world that we have to address, and we will. But right now, what's happening in Israel takes the immediate attention, and I think we've got to separate that and get it through.
Hearing from the very new House Speaker Mike Johnson speaking over the weekend on Fox, talking about a standalone bill rather than uniting the Israel-Ukraine conflicts together the way that President Biden has proposed. This has been a perennial question. How is this House going to pass anything at a time of such incredible division? The division is both in the U.S., it's also around the world, including in Israel. And joining us for team coverage right now, Bloomberg's Oliver Crook in Tel Aviv and Anne-Marie Herdern in Washington, D.C. Ali, I want to start there. Benjamin Netanyahu, the Prime Minister of Israel, an incredibly polarizing figure before the war broke out, came under a lot of criticism for some of the intelligence failures, did not accept responsibility, put the blame on some of his intelligence officials. How much is he losing the room? Is he losing the ability to lead at a really fraught time?
I mean, listen, the huge amount of pressure is building on the Prime Minister, Benjamin Netanyahu. And again, as you mentioned, the context in which this is all happening since this war broke out 3 weeks ago, before that, it was all about the rift within the society, which has not been healed, right? It was put to one side because of the war effort. Many of the people, the hundreds of thousands who went to the streets to protest against Netanyahu, rallied behind the war effort. And so for him to go out publicly on social media to basically divert the blame of the attacks and saying that basically it was a failure on his intelligence and the defense side of it rather than his own responsibility was taken extremely poorly, particularly when it was given after a joint press conference by the War Cabinet, which is composed in part from an opposition leader, right? That is supposed to be a symbol for this sort of unity. For him to go out and do that, he then deleted it. He then apologized. But again, it speaks to the heart of this issue within Israeli society and the mounting pressure on Benjamin Netanyahu. And then again, probably too early for this conversation, but the longer term, what will be the government that comes after the War Cabinet? Because this will be fundamental in shaping the future of Israel, but also its relationship with Palestinians.
And the division is not just isolated to Israel. Anne-Marie, over the weekend, a series of articles about how President Biden is losing some of his constituents, including in certain swing states like Michigan. Axios coming out talking about how some of the officials advising Biden think that it has never been worse politically for him. How does this sort of play out longer term and shorter term in your view?
Well, domestically, the president is still dealing with weak poll numbers when it comes to the economy. Things like inflation continue to top as a part of America's biggest concerns. And now he has another foreign policy crisis, this time in the Middle East. And one of the biggest concerns for this White House is to contain it. It's one of the reasons why it's going to be so interesting when Khalid bin Salman, the Saudi defense minister, comes to Washington, D.C. today. It is clear this administration wants to contain what is going on in the Middle East. But what you're seeing in a state like Michigan, which is a key swing state. And remember, Hillary Clinton lost Michigan by just over 10,000 votes. If the third-party candidate wasn't there, she probably would have won Michigan. This is critical for the Democratic Party. Biden has two issues in Michigan. One is the fact that there is a large population of the Palestinian diaspora, Muslim Americans. There's been a lot of reporting. NBC had a brilliant story out talking to people who said that we're just going to stay home. We're not going to go out and vote for Joe Biden. We feel like he let us down. There's also the UAW workers and those households. And our poll, when it looked at these swing states, showed that the former president, Donald Trump, is actually making headway into some of these UAW households, which is why Michigan is really an interesting state.
Talk to us a little bit, Anne-Marie, about flash forward 1 year. I know it feels like a long time from now, but we are just a year out from the 2024 election. How critical is this issue specifically in the election landscape relative to everything else that's going on?
I think there's too many questions still that remain to try to understand how important this will be on Americans' minds when they go out and vote in just over a year's time. But of course, the fact is, if this does become a wider regional conflict, this can have a tremendous impact on the election. Not just right now, we're talking about the Palestinian diaspora within the United States that potentially voted for Biden in the last election, but maybe will stay home in this one. But what does this mean if oil prices are higher? What does this mean if more Americans are killed in the line of combat? We did see that there's been an increase, an uptick of missiles that are hitting U.S. bases in Syria and Iraq. What if that continues, and what if this metastasizes? And if that is the case, then this could be incredibly difficult for this current White House and then the Joe Biden campaign to really go out and make their case to continue the presidency next November.
Anne-Marie, it's a loaded question. I know, but I'm going to ask it of you anyway. Where do you think the majority of Republicans and Democrats sit with Israel and Palestine? Do they support a ground war in Gaza? Do they support a two-state solution? I'm just curious to hear your thoughts. The average Republican, the average Democrat, what are their thoughts on Israel? What are their thoughts on Palestine?
There's a lot of bipartisan support to make sure that Israel has the funds they need to defend themselves. And that's what we heard from the new speaker, Mike Johnson, over the weekend. He says this week he wants to pass that aid to Israel, and he says he can have bipartisan support in the House. The issue, of course, that he has is he's coming up against more traditional Republicans who want to see the big package. You saw what Mitch McConnell said just the previous weekend, that there are bigger power struggles when you look at China and Russia, and the U.S. needs to be funding all of these national security concerns around the world. So bipartisan-wise,